Today we will see how to represent assets, means current and non-current assets in the statement of financial position, which is also called balance sheet. Many of you don't know you have to write the accumulated depreciation in the statement of financial position as well. So I'll show you here how to write. Okay, so you see this is the format, here the detail and here the cost. Okay, this column is cost. When we write the non-current asset, we will write the cost price here. Okay, then it is accumulated depreciation. We will write the accumulated depreciation in this column. Okay, then here net book value. Net book value equal to cost of non-current asset minus accumulated depreciation. We will write this amount here. Okay, then we will write all the current assets, other current assets. Okay, so in our previous lesson we discussed income statement for service business. So I will recommend you please watch this video, then you come back here, because many things will come from here to this format. Okay, statement of financial position format. Okay, so we are doing this question from O-level accounting first paper. We will see the question before we write up. Zamir is in business providing legal services. Okay, Zamir provided the following balances from his books of account at 31st December 2020. So here we see the list of balances. We have some incomes and expenses, and then we have some non-current asset. We see here office equipment at cost $60,000. We have depreciation for office equipment. We have disposal of office equipment. Okay, so there we have bank overdraft and trade receivable. Okay, bank overdraft is a current liability and trade receivables are current assets. Okay, we will take this current asset here in this format. Okay, so as I told you, I will show you here only current and non-current asset from this question. Okay, so this is the part of statement of financial position. Okay, so here we see the non-current asset. It is office equipment and cost price is given $60,000. So what is the first section in this balance sheet format? We write non-current assets. Yeah, so let us write here non-current assets. Okay, so here we have only one non-current asset. It is office equipment. Yeah, so let us write here office equipment. So on the question we saw the cost price was $60,000. Okay, so we will write here $60,000. Okay, now accumulated depreciation we have to subtract from this cost. Yeah, to calculate our net book value. So what is the accumulated depreciation? Here on the question we have office equipment provision for depreciation $22,500. Okay, so this is the depreciation given on the list of balances. So here we see the depreciation is $22,500. Okay, the first amount. Then on the adjustment we have depreciation is to be charged on office equipment at 15% per annum using the straight line method. No depreciation is charged in the year of disposal. Okay, so we calculated depreciation of office equipment $8,730. Okay, we take this amount here in the income statement as an expense. Okay, so this is also our depreciation. Okay, this amount will be also added to this amount $22,500, the opening balance. So let us write here plus $8,730. Okay, so here if we sum up these two amounts we get $31,230. Okay, the total. Then we have one more adjustment here on the question. In February 2020, office equipment was sold for $1,000. This equipment had been purchased for $1,800 on 1st January 2018. The sales proceeds have been debited to the bank account and credited to the proceeds of disposal of the office equipment account. No other entries have been made in respect of the disposal. Okay, so here now we have to calculate depreciation on the disposed asset as well. Okay, so disposed asset cost price is $1,800. So this asset is disposed in 2020. Okay, so here the cost price will not be now $60,000, because from this $60,000 we sold $1,800 asset, non-current asset. So what will be our cost price? 60,000 minus $1,800. So we get here 52,000. So here we get $58,200. Okay, so don't be confused. The selling price, the cost price of the disposed asset, you must subtract from the cost of the asset given on the question. Okay, now this is not done. We have to calculate depreciation on this amount as well. Then we have to minus from this amount, okay, to calculate our net accumulated depreciation. Okay, so here this asset was purchased in 2018. Okay, so for 18 and 19, for these 2 years we have to calculate depreciation on this amount. Okay, so if we multiply by 15%, we get here 270 for 19, for 18, and again 2019, if we multiply by 15%, we get 270. Okay, so 270 plus 270, we get here $540. Okay, this is the depreciation for the disposed asset. So this depreciation is no more here with this amount, so we have to subtract this amount. Okay, so minus $540. Okay, so now what you get if we subtract? $30,690. Okay, this is net accumulated depreciation. Okay, so let us write here $30,690. So now if we minus this amount, this depreciation from the cost, we get here $27,510. Okay, so this will be very complicated, but still you have to understand, because statement of financial position you will see on the question, it is a must. So if you don't understand, watch this video once, twice. Okay, then it will be clear to you. Okay, so this is only one non-current asset here on the question. Okay, so now what to do? Now we will write the second section. Okay, what is the second section in the balance sheet? It is current asset section. Okay, so let us write here current asset. Okay, so here what are our current assets? We have on the question trade receivables. Yeah, it is our current asset. We see here $15,600. Okay, so let us write here trade receivables. So we have an adjustment regarding trade receivables. Okay, number 5, here we see one of Jamir's clients have become bankrupt. The client owed $1,885. Jamir does not expect to recover this amount. Okay, so the business cannot receive this money anymore. Okay, so this will be a bad debt or irrecoverable debts. So this amount we have shown in the income statement, okay, as an expense. So here we see irrecoverable debts $1,885. Okay, so we have to subtract this amount from the trade receivables. $15,600 So from this amount, we will subtract $1,885. Okay. So what we get if we subtract? We get here $13,715. Okay. So here we have one more current assets. So here adjustment number 1. The annual rent is $16,000. On 31st December 2020, rent was paid to cover the period from 1st January 2020 to 31st March 2021. Okay, so here the annual rent is $16,000, but we paid rent for 3 months in advance. We are doing this account for the year ended 31st December 2020, but we paid rent until 31st March 2021. So January, February, March, 3 months we paid in advance. Yeah. So if for 12 months we pay $16,000, so how much we pay for 3 months? Simple calculation, it is $4,000. Okay, this is paid in advance. So expense in advance will be current asset. Expense in outstanding will be current liability. Okay, so it is advance. We will write as asset, current asset. Okay, what current asset? We will write here other receivables. So here it is $4,000. Okay, so now what to do? Now we will calculate. Okay, by the way, here the cost column is closed and accumulated depreciation column is also closed. Okay, we will just keep this column open because we will add this amount with other current assets. Okay, so here now we will add these two current assets. So here 13,715 plus 4,000, we get here $17,715. Okay, now here our non-current asset is 27,510 and current asset is 17,715. So what is our total assets? So now if we add these two amounts, we get $45,225. Okay, this is our total assets. We will write here total assets. Okay, then what is the continuation? Then we'll write current liabilities, non-current liabilities, capital and other reserves. Okay, equities. So this is how you have to prepare statement of financial position, the assets section.